Hi guys, welcome back to CoinSavvy, your go-to channel for all things personal finance. Please don't forget to subscribe and hit that notification bell so that you never miss a video. Today, we're going to talk about something that can transform the way you budget and save money. If you've ever been caught unawares by an unexpected bill, or you find yourself stressing over how you're going to save for your future goals, then sinking funds are exactly what you need. So, what is a sinking fund? Think of it as a financial safety net for both planned and unexpected costs. It's like preparing for the future without having to take a huge hit to your bank balance when they happen. If you think having one big savings account is enough, it isn't. How many times have you had to dip into your savings for something small and then you ended up feeling like you're not getting ahead? This is exactly why sinking funds matter. By setting aside money for specific expenses, you're able to avoid that constant back and forth with your savings where you put money in, then something unexpected comes up and then you have to take it out the next minute. You'll know exactly what's for emergencies, what's for your next trip, and what's for buying that new phone that you've been looking to upgrade to. Let's jump into how you actually start a sinking fund. It's super simple. All you need is a plan. First step is think about your upcoming expenses. That could be annual expenses like car insurance, school fees, or holiday shopping. Then the next thing you do is figure out how much you need. So say your car insurance payment last year was 30,000 shillings, then that should be your target. However, I like to have a bit of a buffer just in case life happens, so I would increase that to 36,000. Lastly, break down that cost over the months leading up to it. So say you start 12 months before, that means you'll be saving 3,000 every month for your car insurance payment. Your sinking fund should primarily act as a financial safety net for planned expenses. However, you can also establish a sinking fund for specific potential emergencies. For example, if you have a home maintenance sinking fund, this would be able to help you pay for unexpected expenses when something in your house needs to be fixed by, say, a plumber or an electrician. This fund should be kept completely separate from your emergency fund. Like, those two funds should never see each other or touch each other. I understand that saving for multiple goals can feel overwhelming, especially somewhere like Kenya, where very few banks give you the option of being able to save for your goals using one account while also earning interest. Guys, I hope the lighting changes aren't too stark. Anyway, just bear with me. Okay. So this advice I'm going to give next is specific to Kenya. However, I hope wherever you're watching from, you do have the option of opening a single saving account where you can save for multiple goals by just putting your money in different pots. Some suitable options locally for sinking funds include money market funds, a savings account to the bank of your choice, or I know there are also apps like Chooms. Keep in mind that you will incur costs when you deposit and withdraw funds when you use any of these options. Also, you might have to wait up to 48 hours to access your funds upon withdrawal. On the positive side, these options allow you to earn interest, which can provide an extra buffer for unexpected expenses. To keep additional costs low, I would suggest that you pool your sinking funds. For instance, you can have 2 or 3 sinking funds in a single MMF or a savings account. For example, you could save for your insurance and a new phone in one MMF. And what you will do is when you are doing your budget monthly, you transfer the funds for both items at once, and that should help you save on transaction fees. If by any chance you bank with Loop by NCBA, there's a built-in option in the app that helps you save for your goals, and you can also automate this process. On the plus side, you will not get charged to deposit the funds into the goals. However, guys, I am not endorsing Loop, though I use them. I really liked what they had to offer in the beginning, but these days they have introduced all manner of transaction charges, and it just doesn't make sense financially anymore to choose Loop over any other bank account, except if you're just looking for the other functionalities that the Loop app offers, then maybe, just maybe, it will actually make sense for you. Once you have your plan in place, tracking your sinking funds is key. So, whether you're using an app, spreadsheet, or a good old fashioned notebook, just make sure that you're keeping tabs on each fund. The goal is to avoid dipping into other funds by being clear about what each one is for. Also, when you're reviewing your budget, make sure you're reviewing your sinking funds monthly, and whenever you hit a milestone, please celebrate it. You have done well and you deserve to celebrate yourself. I've got one last tip before I end this video. When buying items that go on sale at a specific time of the year, make sure that your sinking fund for that particular item is fully funded at least a month before the sale. So we know here in Kenya, stores like Furniture Palace have sales media, and if you're looking to buy electronics, the Black Friday sales around November are a great time to get a good deal. To make sure that you're prepared and not stretching your finances, you could begin saving the year before. Thanks so much for watching, guys. That's it for today's video. Sinking funds are a small change that can make a massive difference in your financial life. If you found this video helpful, make sure you like, subscribe, and share. Also, hit that notification bell so that you never have to miss a video. I'll see you in the next one. Bye.